the big trend, and perhaps the big surprise of this year, is where interest rates are now. They've actually stayed a lot lower than expected. Going into late 2016, interest rates were actually, longer term date interest rates were moving up or ramping up quite quickly. They settled in the early months and have stayed very, very low. So a couple of what implications that has had. The yield trade, those companies with sustainable quality earnings have been strong. So you've seen some of the utility and energy companies all trade well this year. And from an equity perspective, offshore earners have actually performed well.
Do you expect that to continue?
I guess that's the big question. We've seen a change of government here, and we're actually seeing the US economy start performing quite well. Short-term interest rates in the US are likely to go up again this year before the end of calendar year 2017. And what happens locally with the change of government? In the short term, with some policy changes around immigration and things, we may see a slowdown. But historically, Labour governments have been quite, I guess, fiscally, for want of a better word, larger spenders. So that's actually been stimulative for the economy. That could push pressure on our interest rates and currency higher.
So why do you think the New Zealand market has stayed so strong for so long?
I think when you look at the market, you have to actually start looking at probably individual stocks. Actually, the market breadth, and particularly in the last few months, what's been driving the market has only been a small handful of companies. A lot of the yield trade has been a little bit sideways as interest rates have stabilised, but it's been the offshore earners such as Fisher & Paykel Healthcare and A2 Milk and the like and Xero that have been a big contributor to the index. If we look at the index, it depends on what contribution or where the contribution is coming from. But if we break down what's in the market, there is some obviously risks out there. The construction sector, is that rolling off? What impact will new government have on some of the energy companies? There is some regulatory risk that may come in, and offshore earners trend is very strong. So it becomes down to, I think, a bit of almost a stock pickers market.
So where would you be putting your money in the next 12 months?
If we look at it from an equity perspective, there are a handful of I guess opportunities that we like in individual companies. The offshore earners, the big growth companies, Fisher & Paykel Healthcare, they've all performed well. They're trading at big multiples, but they're the ones that are actually delivering growth. And I think in a market where you've got regulatory risk on one side and concerns about interest rates, any company that's delivering on its growth forecast, no matter how expensive, probably will continue to perform well. But companies such as restaurant brands, we actually held an investor day recently, and that company, one, it probably is a beneficiary from wages going up. Two, their international expansion into Australia in a way where they can actually they've actually got a model of turning around stores and creating change. It looks really exciting.
Any other smaller stocks, or are smaller stocks a little bit risky in this market? Are you better to stick to those big players like you mentioned Fisher & Paykel Healthcare?
There's always exciting, I guess, disruptive stories in the market, and as long as you do your homework and are prepared to ride it out, you're going to see disruptive technologies come through, and these things start small, and so you've just got to do your homework.
And international exposure, what would you be thinking about there as an analyst?
At the moment, probably where the New Zealand market is, we are probably pushing more money, looking to push more money offshore. Some of these big technology companies, they're going from strength to strength. They're growing earnings, double-digit growth. Yes, they're trading at reasonably high Ps, but not actually in context of where interest rates and things are. I think these companies such as the Amazons and Alphabets and things and Apples can continue to deliver significant returns.
What do you think is going to happen in the currency market?
Yeah, well, I think it's interesting. If we look at it from a domestic perspective, over the short term, we may see a slowdown as government implements its policies. But with a Labour government generally having higher spending, that could be stimulatory for the economy. We may see interest rates push higher and therefore currency move higher. Remember, when the currency hit 89 cents against the US, that was under the last Labour government. So, but then we have to look at it from a global perspective as well and what is happening offshore. Interest rates are going to go a little bit higher in the US this year. Whether longer term interest rates push up higher or not is a question mark. The yield curve is flattening. So I suspect that in the short term we might see the New Zealand dollar fall a wee bit, but in the medium term it probably heads higher.